Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, I wanted to jump in and talk about breakout strategies, breakout approach, how to find those perfect stocks, kind of my criteria, my checklist. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe, and hope you guys are all having a fantastic Valentine's Day today. We have an awesome sale going on for Valentine's Day for 50% off our school, private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade stocks. It's called the Swing Trading Masterclass. It's an 8-week course. You guys have lifetime access to it, and honestly, it's awesome. So check it out down below. Use code Valentine's for 50% off. So check it out, and shout out to my wife for giving me this awesome dad hat for Valentine's Day. I appreciate you. All right, let's turn to the computer and see some of our more recent trades here in our approach. So, all right, the first thing here that I look at is going to be trends, okay? A lot of people don't do that, but for me, you kind of got to. You got to have an upward trend in a stock you are buying. So many people will find a stock on a downward trend and expect it to magically recover. Yes, it can happen, but will it? Probably not. So for me, when I'm trading, the first thing on my checklist is an upward trend. All right, with this stock here that we took a position with, PWP, you guys will see has that great upward trend. And guys, the broker I am using, everybody always asks me, the broker I'm using is Moomoo. They're awesome. They offer paper trading. They offer charting, scanning, indicators, everything you need, they offer. And you guys can get up to 20 free stock just by clicking that link down below. But more importantly, I use them. I love them. And they're the broker I will always use. All right, getting back on track here. What else do we look for? So the next thing here is support. Okay, support could be a variety of things. Now, with this stock here, pay attention to this blue line. This blue line is a very, very important indicator called a moving average line. It's actually the 90-day EMA line. So what this does is it acts as trend indication as well as support and resistance. So look back at almost every time this stock hits this blue line. All right, hits it once, twice, 3 times, 4 times, 5 times, recently 6 times. Each and every time it hits that line, we have buying pressure at that line. So if I could buy this stock at any price, I'm trying to buy it as close as I can to that blue line, right? Obviously, each of these moving average lines just act as different support levels, like strength levels. So the red is a 200-day moving average line. So it is going to be a harder support, harder resistance. But the issue is it just doesn't hit it as often, right? It hit it here and it hit it in the past here. But overall, it just not every day it hits it. So you'll have a lot more trade opportunities with it on the 90-day moving average line, but it does occasionally break through. So what are some other metrics that you can look for to make sure it doesn't break through that line? One of the things I look at is going to be the RSI. The RSI was trading for a 34. The last time it was trading for a 34 was back right in here. And what happened? Buying pressure. Okay, so now let's go through this again. We have a stock on an upward trend. It's sold off down to the 90-day moving average line. It's undervalued on the RSI. The last things I look at is going to be a lower time frame. So I'll go to the hourly or 2 hourly or even in some cases, the 4 hourly chart. What I am trying to do is form some sort of trend, right? And you guys will kind of see this stock here. We can remove these. Look at this trend. It hits this line and just has a hard time breaking above it. So this is the trend line breakout we're looking for. We're looking for this. This would have been, and this is where we did enter this position, was on that first hourly to open up above this trend line up here at about 23.27 was our cost. Right there. So doing that, let's go ahead and plan this out. putting that our entry point there, our stop loss about 3 to 4% from its current price for a possible push up to resistance in this zone gives a 4-to-1 risk and reward. So why is that important? That risk and reward? Well, I will tell you. The reason why it's so incredibly important is because if you guys are starting out with, like, let's just say $500, you guys find a stock once a week, you're risking that 3% with a 4-to-1 risk and reward. And if you could win even 40% of your trades at the end of the year, you're looking at about $2,100. Even if you win 30% of your trades, guess what? You're still doubled your account. So it's not about these crazy stocks that you find at $1 and you're trying to sell them for $200. No, it's these small stocks like this with good risk management, good risk and reward, good setup opportunity, and a good checklist. Doing this will help you be such an incredible trader. So I hope you guys all enjoyed it. I hope you learned something. If you did, check out our school, code Valentine's for 50% off. Only like one more day for that code, so use it, sign up. And guys, check out our school and sign up with Moo, and we'll see you guys in the next one. Take care.